Yeah, we lost again. Yes, sir, we lost. Audio lost. No, still not. Still we cannot hear you, sir.
So we cannot hear you.
Leave it. Now you talk. Now,
Can you hear me now?
Yes, sir.
Good. Voice clarity.
Okay. Clearly you are able to hear me, right?
Yes, sir. Yes, correct, sir. Now it's there.
Thank you. So anything you would like to ask before we start today? Nothing? Everything is clear? Yeah. This solvency ratio? Yes, somebody is coming. Solvency ratio. What is the solvency?
Sir, classroom video is we cannot see.
Classroom, you are not able to see?
Yes, sir.
Okay, you are able to see the screen, right? Screen is
Yes.
okay?
Screen is okay. Screen sharing is.
These people not allowing us to see them online. Leave it. Yeah. Yes, it's not interesting actually for me. Because you are not asking anything. I don't know whether you are getting it. On Sunday, you are coming here and going back. Anybody has any specific question to ask? Huh? You are disconnected from the subject.
We are understanding, but we don't recall.
You are understanding, but you are not able to recall.
Recall to answer your question.
Forget about that question. You have any questions? I'm asking you. That question was I posted you because of you are not answering that first question. I asked you to ask the question only. You are not asking questions, so I asked. Anybody is attending first offline class? That they will give first offline class. Nobody? Okay. Anybody's name is starting with N, letter N. Letter N. N. After M in English, that's what letter. N. Anybody? No? Huh? Why? Just you can try. Randomly.
Online and there's Natashekar.
Yeah, online somebody is there. Thank you. So at least somebody is there. The letter what I chose. Okay. So can you define accounting in your own way? What is accounting? What do you understand by accounting? Somebody responded from online. No? Don't turn the pages now. See, now we are getting alert. Huh? The day when we are asked to go for voting should not assess the party. Before that, you must understand how their movement, how they are approached, how they are behavior, everything. Not on the day of exam. Okay. On the day of exam, you have to exercise. You have to prove it. That's it. Hey, sorry, anybody? Those are from online. Somebody told no. Starting with N. What is accounting according to you? I think you did not lose us, right? You are still connected. Online people.
Yes, sir. Yes, sir.
Please try to answer this. No, what is accounting? Without seeing any paper or anything. What do you understand by accounting? Okay, forget about that particular person. Anybody?
Identifying, recording, and
Okay. Yes.
the transactions into the particular books of account that you maintain the.
Okay. Yes, sir. You are listening.
Identifying, recording, and analyzing the business transactions.
Whenever somebody is asking you what is accounting, is it more one word process? Accounting is a of what? Process of Recording.
Recording.
First one is identifying. Then recording. Immediately after recording, summarize. Classify. Then of what? Let's say something, no? Some verb you are saying. Identifying, recording. Yeah, of business transaction. In order to
Analyze,
in order to
interpreting and in order to analyze, interpret and.
In order to know the financial performance and position of company.
know the financial performance and the financial
Position.
position. Or simply know the business performance. And analyze such performance,
Communicate.
interpret and communicate with stakeholders. It's very numbers involved in technicality. It's about memory, it's about understanding. Accounting is a process. Whenever you say process, it has several steps. Sequential steps means process. Process is nothing but sequential steps, one after another. So accounting is the process of identifying business transactions, recording of business transactions, classifying the business transactions, summarizing the business transactions, finding out the results of the business transaction, analyzing the results of the business transaction, interpreting the results of business transaction, and communicating the result and interpretation of business transactions to the stakeholders. Instead of using this business transaction everywhere in all the work, I just keep it last. Accounting is a process of identifying, recording, classifying, summarizing the business transactions in order to find out the result of such business transactions and also to analyze and interpret and communicate to the needy people. There is something you should understand. No? We come here and go, that's not good. We try to have some kind of basic understanding. That's accounting, financial accounting. Then what you have done? We have done all this process. Whatever we told so far, identifying. What is business transaction actually? How do you understand? What is business transaction? Yes, sir? Buying and selling of goods. It's an example for business transaction. What is business transaction?
Any transaction that involves cash or value of the goods.
Money or money is worth. Any activity that takes place in the business which involves the transfer of money or monies worth from one person to another, that could be called as transaction. Example for transaction is what he told, for buying of goods, buying of raw material for a manufacturing company, buying of stock in trade for a trading company, selling of those finished goods of a manufacturing company, selling of those goods purchased by a trading company is called transaction. Payment of salary, payment of rent, anything which involves the transfer of money or money is worth. Then where we record the transaction first?
Journal.
First we identify the transaction now. How do we identify the transaction?
Whether money is involved or not.
How do you identify that?
Some bills or bank statement.
Some evidences, some documents. Some documents. If it is a purchase, there will be invoice. If it is sale, again there will be an invoice. Invoice raised on the customer. Purchase means invoice received from the supplier. Colloquially, we call them as bill. In accounting or business, we call them as invoices. Payment of money to bank. Deposited money into bank. There will be a challan. There will be a challan, right? Bank will be fixing a seal signed by the authorities and given to you. So bank money deposited. Money will be drawn. Again, there will be a bank statement or withdrawal slip will be there. See, any transaction is evidenced by a document. So through the document, the accountant comes to know what are the transactions, those who are taking place in the business organization. after coming to know what is a transaction, identifying a transaction, he has to record those transactions into books of accounts. What are those books of accounts? Journal first. If it is recorded first time, that is called journal. If you are having lot of transactions, I don't want to record all those transactions in a single book, then we can follow a system called ledger is meant for what? Classifying, summarizing. Ledger is not meant for recording. Journal is meant for recording. If I don't want to follow journal, what is the alternative available for me? Like book is recorded by you. Some book is needed for you to record. You should remember, it's not a much technicality. No? Suppose if I give you some transaction and ask you to post into ledger or pass in a journal, that is little bit, if you are having struggle, I can understand. But this is a story. This is kind of
This or that, we keep only one in mind.
no. If this or that, you should keep both in mind. If this road is blocked, what is coming with the road? This road is blocked. Yesterday my son is telling, I cannot go to tuition because this road is blocked.
That book says.
Nobody is there, so I cannot go. He is that much afraid. But when I told him there's another way, please go. You can reach the brigade road in this route also. So both roads should be known to you. What you are using is up to you, depending upon the situation, availability, or need. So either journal or subsidiary book
Cash book,
is an example of subsidiary books. One of the example for subsidiary books is cash book. Okay, so why do we follow subsidiary book system of bookkeeping? Why don't we go for only journal? Why this option is available?
multiple transactions.
Multiple transactions.
And specific.
If you write all the transactions in a single day, it's not possible to complete. Thousands and thousands of transactions are there in a single day. Journal is a single volume of book, single book. Only one person can write in the journal at one time. So you cannot complete all the 100 transactions or 1000 transactions recorded in the journal in a single day. By the time second day, there are another 1000 transactions are going to be there. So people invented another system called subsidiary books. So both are bookkeeping. Both are bookkeeping. A small concern, but hardly in my business every day some 20-30 transactions will be there. He himself will record in the night 10 o'clock. He will sit and write it everything and will close the business. For him, journal is very much enough. If you are not in that case, the bigger organization, Infosys, Wipro, limited liability companies, lot of transactions having throughout the country or throughout the world, they are having business premises. Okay, every business premises generating lot of transactions every day. Now we are following a cloud system, ERP. Okay, cloud system of computing, bookkeeping. Everywhere, wherever your premises is there, wherever your location office is located, they can enter from there. It's there with the cloud. Okay, that's another improvement. That's because of IT, because of computers. Okay, but in those days, even without computers, also people invented a system called multiple books. Subsidiary book is nothing but multiple books. Each and every group of activity, one group, one similar activity belonging to that group will be recorded in one book. That is called subsidiary books. What are the subsidiary books available? Purchase book, purchase return book, sales book, sales return book, cash book, bills receivable book, bills payable book, general property. Totally 8 books are available for us. Sales book records only the credit sales of goods. Credit sales. Sales book records only credit sales of goods. Goods means what? Suppose MR of tire, it is selling tire on credit. It can be recorded in sales book of MR. Sales book. Suppose it is selling on old furniture, that cannot be entered in sales book. Okay. Suppose old furniture is sold by MR of tire company on credit. Then they will record general property. It cannot be entered in any of the 7 subsidiary books.
Fixed asset.
It's a fixed asset. They don't want that to be used further. It has become obsolete or it has become outdated. So they want to dispose it off. Somebody bought it, they did not pay the money till they are going to pay later. If that is the case, that will be recorded in journal proper. Then again, journal proper is nothing but a journal only. Then why are you asking us to again prepare a journal? These kind of transactions are rare of rarest. If you are disposing of old furniture, they will sell it for cash. If it is so, where do you record? Old furniture is sold for cash. Cash book. Simple. Cash book of subsidiary book. You can write it. Majority, everything will be covered in subsidiary books. If it is not covered, if it is not eligible to be returned in any of the 7 subsidiary books, then will go to journal proper. That's the journal. Along with subsidiary books, if you are maintaining a journal, you call it otherwise journal proper. Example for journal proper transactions are selling old furniture, selling a fixed asset on credit. Suppose newspaper is bought by your company every day. But one fine morning, there is so much newspaper accumulated. You want to dispose it off. Old newspaper. You are selling it on credit, journal proper. You are selling it on cash means cash. So like that, we have 7 subsidiary books along with 1 journal proper. So either you have to follow journal or you have to follow subsidiary books to record the business transaction. After recording the business transaction, either in journal or in subsidiary books, the next level is classification of business transaction. The classification takes place in ledger. Of course, in subsidiary book, part of classification already taken place. In journal, no classification, just recording. Irrespective of the nature of transaction, chronologically we are recording all the transactions one after another based on the time of occurrence. In which one? Journal. So there is no classification taking place at all. Chronologically, we are writing all the transactions, entering all the transactions. Posting into ledger only is having a concept of classification. Rent account separately. So how much rent you paid, on what date you paid, how much rent? That is being taken care in rent account. If I say account, I mean to say ledger account. Whenever I say account in accounting, that refers to ledger account. What is ledger account? One concept or one particular account head is created for recording all the items relating to that particular account. Rent account. You may be paying rent either cash or through check or through account transfer or through demand draft. Whatever it is, you are writing in journal. But now you don't know how much rent you paid for the entire year. In journal alone, you cannot come to know how much rent paid so far in that particular year. Because classification is not there. You have to check wherever rent is there. In different days, rent will be there. But in ledger, we create one account called rent account. And you are writing all the rent paid. Whenever the rent is paid, we are writing it. If you total that, you will get to know how much rent has been paid in total. The classification, grouping, summarizing is taking place in ledger account. Okay, then after that, finding out the result of the business transaction, right? That is taking place in profit and loss account and the balance sheet. The net profit, how much asset, how much liability, how much equity, that is in balance sheet. Expenditure and income, that is compared in one statement, that statement is called profit and loss account. To find out the excess of income over expenditure or the other way around. Okay, before doing this kind of exercise of finding out the result, we want to confirm whatever you have done is correct, mathematically correct, arithmetically correct or not. That checkpoint is called as
Trial balance.
Trial balance. So these flows will be always there in your mind. Even if you do not know accounting, sir, there is a transaction, how to enter it, please go and ask the accountant. Then you can say what that's all. You can go and tell that. I am not accountant. You need not to be knowing exactly the transactions entry. But you should know a broader understanding of accounting. That is very much important. Okay, sir, prepaid rent is not paid. What should I do? Accountant will take it. Or you should know basic idea, that's all. You are knowing it well and good, but not necessarily, not compulsory. At least that is manageable. But the basic concept of this flow, I was showing one flow chart over there in a slide. Transaction to ledger or journal, I mean, subsidiary book or journal, then ledger, then trial balance, then financial statement. Okay, so these are all you have done. Then analyzing. So that analysis. For analyzing, we have some tools. What I am analyzing? The financial statement I am analyzing. What is financial statement? balance sheet and profit and loss. Why we prepare that? We find out the financial position, balance sheet, financial performance, income statement or profit and loss account. Okay, these two put together we call it as financial statements. These two are prepared to know the last point of accounting process, that is finding out the result, finding out the result of the business transaction. So many transactions took place. Okay, so what? What happened last year? That is being captured in this particular statement. Then we are analyzing this, whether we have traveled in the right path or not, or still we have to improve ourselves, or how are we standing in front of our competitor in the same industry, others how they are doing, or other industry. If I have invested this much money in tire industry, what would have been my profit? I have invested in chemical industry, what is my profit? Industry to another industry comparison. Within the industry comparison. Within the industry means between the companies in the same industry. Infosys is comparing itself with Wipro or TCS. Okay, that is a concept of inter-firm comparison. Inter-firm between the firms working in the same industry is being compared. That comparison is always comparison. Without comparison, we cannot take any kind of decision, right? Comparison. Nobody will say comparison is a very bad attitude, but comparison is always good to know what we are. Okay, I can compare myself with my peer, right? My own colleagues. How much he is getting in the same qualification, same age group, same cadre of job. What is his salary? In the same company. That is called intra-firm comparison. I myself comparing with my own colleagues in the same company, or myself can be compared with the same category of people in the other company. Okay, another industry. Something like that. In companies also, companies' performance, we need to compare. How was my sales in the last year? How is my sales in the current year? Is it increasing or it is declining? If it is increasing, is it increasing in the same pace the industry sales is increased? Entire industry has been increasing with 10% increase of sales. But my company also increased, but it is increasing by only 5%. Then there is something wrong for my company. I have to analyze what is the problem. Okay, then profit or any other concept of that, any particular accounting you can take, point you can take, or variable you can take, and you can compare yourself with yourself. Last year my sales was 1 lakh, current year my sales is 2 lakhs, fine, increasing, 100% increase. But industry average, how much is increased? So in industry 300% increase, then you are not doing good. So it looks to be good, but you are not doing good. Industry average has increased by 300%. 1 lakh, 1 crore was the total sales of the industry last year. Now it is 3 crores. But yours is only 1 lakh was, but now it is 2 lakh only. You are improving, but not to the speed of the industry, other companies. Like that we can compare. For those purposes, we need to analyze the accounting statement, accounting data. That is happening in applying so many tools. Trend analysis, percentage analysis, common size statement, comparative statement, ratio analysis, cash flow statement, and fund flow statement. All these things we have discussed only one, that is ratio analysis. There are so many ratios. Okay, majorly 4 categories: solvency ratios, profitability ratios, liquidity ratios, activity ratios. There are 4 categories. We discussed enough in the previous classes. I think that much you have done in the previous classes.
Last one.
Liquidity, solvency, profitability, activity. Yeah. You have taken that in detail in the last class. Yeah, I can say it. Anything else you discussed out of this? I mean, beyond this,
Solvency, liquidity, profitability.
activity. We have taken it in the last class. Yeah, only those 3 or 4 are there.
This 4 will come in the exam.
Anything comes in the exam, will be followed up. Will be followed in the. Please store only, no.
Sir, will there be theory in the exam?
Huh?
Will there be theory in the exam? Or is it only practice?
What do you mean by theory?
Like the definitions, the types.
What you understand cannot be the same what you understood.
Yes, sir, the definition, the format will be sometimes the types, all these things.
See, without number.
Yeah, correct.
Only you try to push number, then you try only alphabets.
Yes,
Clear now. Huh? If highway is there should be some pathway to walk. Pedestrians Road will be there, you can walk, but you will reach later. Those who are going in car will reach faster. Those who are walking will reach the place very late. Sometimes they may not get tired. So you have to know how to ride also. But at the same time, you have a chance to walk also. Yeah, okay. Of course, sometimes car cannot travel some places. If you are fully crowded, that time you have to park it in couple and you have to walk only. That time will be some 10 mark, 20 mark, 30 mark. Maximum 30%. Beyond that, after crossing the M0, you have to again go in car only. So again, should I walk only means no use. It will be there. That is last question, no?
Almost we have reached the last.
No. One more thing we need, no? Preparation to start, yes, I understand. Okay, it is there, sir, no problem. Come back to the syllabus. Anything else we discussed apart from this, what I call, I revise it now. Okay, the next concept is cash flow statement. Cash flow statement. Or cash flow analysis. Okay, cash flow statement, or you can call it as cash flow analysis. You have touched upon this before. So cash flow statement. Cash flow statement is a statement that summarizes or that exhibits the flow of cash in a business for a period of time in 3 different activities. How much was my opening balance? What happened in the particular year? Because of that happening, how my opening balance has changed into the closing balance. Suppose I was having 1 lakh rupee in hand on 1/1/2022, the starting day of the accounting year, 1/1/2022. Now 1 year is over. 1 year the business took place. The business has been run. 31st March 2023, my closing balance or the cash balance on that particular day is 50,000. 1 lakh was there. 1 year I conducted my business. Now my cash balance is 50,000. These 2 data where you can come to know from? I'm telling 2 data, right? Yeah, trial balance also you can come to know, but that is not the external document, no? Is trial balance an external document? Journal, ledger, trial balance, subsidiary books, all these are internal documents. Nobody can go and ask the company, can I check your trial balance? No. They are not.
We can see in income statement, sir.
You can?
See it in
Financial
income
statement.
statement.
You are asking, can we see the income statement of a company?
Yeah, in that we will have a cash flow status.
No.
Balance sheet.
What is income statement?
Where I will have income and expenses. So there I will have cash also on hand.
What is
balance.
expenses or what is income?
Income is what I have received, either in form of material or in the form of
What I
cash.
have received or what I am supposed to receive? What
Yeah.
are
Yeah.
then what is expenditure?
So where I have paid. So in both cases, there will be cash transactions.
No, we are talking about cash transaction or cash. Our point
To
is
check the
about-
balance, sir, cash balance.
Yeah, our point is
Yeah.
about balance.
Balance. Yes, yes.
So expenditure is an outcome of cash.
Yeah.
Expenditure is a function of cash. Or even without cash also can I spend or not?
Yes.
You can spend. So expenditure and income does not have any connection with cash balances.
Okay.
Because of cash expenditure, my cash balance is supposed to come down. That is true. Mathematics. I had 1 lakh, I spent 60,000. Your hand should be having only 40,000, unless otherwise no other inflow or no other expenditure or no other assumptions are there. Okay, so expenditure and income statement will talk about only expense and income. That's all. It will not tell about balance. Balance all will be there in where? Where will be?
Balance sheet.
The name itself is a balance sheet, no. Somebody told trial balance, I can understand. If trial balance, cash balance should be there. Because balance sheet and income statement are prepared based on the data derived from completed, derived from trial balance. Trial balance is a checkpoint. Trial balance is the point in which we are checking the arithmetical accuracy of all the books of account. After that, only that much available. You don't worry about LKG, UKG, first standard, second standard. After you complete your +2 mark sheet is there. The +2 mark sheet is nothing but your trial balance. Based on that, you are getting into admission. You are getting admission into college. The +2 mark sheet is nothing but your trial balance. Everything is fine. Everything is done. Sir, pass 35 mark. Everything, all the subject pass. That's all. Whether you know how to speak, how to. That mark sheet is telling yes, this much is the last one. That's all. Similarly, trial balance is the one for 1 year period of time. Up to now, what is your position? Debit balance, credit balance. All income will be there. All expenditure will be there. Assets will be there. Liability will be there. Equity will be there. All, but in different names it will be there. Rent received is an example for income. Commission received, another income. Sales, another income. Rent paid, an expenditure. Salary paid, expenditure. Commission paid, expenditure. Purchase, expenditure. Okay, land and building, an asset. Machinery, an asset. Furniture, an asset. Likewise, cash also will be there in the trial balance, closing balance of cash. Or whatever is there in the trial balance, in the name of cash, that is closing balance only, because trial balance is prepared at the end of the year. So that is the closing balance. But the document is not known to us. The document is not given to us. So we cannot see. Accounting process, you are right. In trial balance, they can find cash balances. But that cash balance is taken from the trial balance and it is recorded in balance sheet.
Balance sheet.
Under the name called current asset. So that document is publicly available. Which one? Balance sheet. For limited liability listed companies, public limited companies, it is publicly available, so you can take that. So opening balance of cash, where do you take from? Previous year balance. Last year balance sheet has closing cash balance of that year. But that year closing balance of cash is becoming the opening balance of current year.
Current year.
We need two balance sheets to prepare. Cash flow statement. Two balance sheet. How my cash was, how my cash is, what took place, what has taken place in between these 2 points in time that I'm going to find out. Okay, there are two ways in which you can do this. One is direct method of cash flow statement, and one is indirect method of cash flow statement. In direct method, we have to follow certain procedure by appointing a separate person. He has to write only cash inflows and outflows. That is not required actually. We already have an accountant, he is recording it, everything. So we can take the balance sheet of 2 years and we can take some information from the accountant and we can prepare a cash flow statement. It's not indirect method. Normally we follow indirect method of cash flow statement. Okay. Accounting standard 3 of Indian accounting standard is talking about cash flow statement. Before I go into the technical aspect of cash flow statement, let me tell you a few more things why we need this cash flow statement. Of course, we already have a cash account. Cash account is an example for ledger account. Cash book is an example for either cash book will be there or cash account will be there. If you follow journal system only, cash account will be there. If you follow subsidiary book, definitely cash book is going to be there. In both cases, the both things are doing the same purpose. What is the job of cash book? What's the need of cash book?
To record only cash.
All the cash transactions. All the cash transactions.
If you have cash book, you don't prepare the cash account.
No need. No need, right?
Yes.
See, purchase book is there, but you have to prepare purchase account also. Why? In subsidiary system, subsidiary bookkeeping system, if you follow, you will be maintaining a book called purchase book. But in spite of maintaining a purchase book, you are supposed to prepare one more account called purchase account also. Why?
The book is only for recording the data, which is already done.
Okay.
Account is where the transaction happens.
Then you are keeping quiet when I'm saying, if cash book is maintained, I claimed just before, when cash book is maintained, I need not to maintain or I need not to prepare cash account, I told you. That time we are keeping quiet when you know. In that case, it is not same case. That is the logic. In purchase book, only credit purchase will be recorded. Only credit purchase will be recorded in purchase book. But the company may also buy some raw material, from some of the supplier who is very much adamant on cash and carry, that's all. You have to pay cash. Goods purchased on cash, it will record in only cash book, it will not go to purchase book. So if you take only purchase book total as your purchase, that's not a real purchase. One second, that's not a real purchase. That is part purchase. There are some more purchases you have done it for cash. So that is not captured in the purchase book. If you take only purchase book, you are just taking only a part of the purchase, not the total of the purchase. That is why we are supposed not to comment here. We have to prepare an account called purchase account. In that, you will bring the total of purchase book. Total of purchase book as on so also date. Then you have to post entries from cash book. In cash book, if you buy, you will be writing the credit side, buy purchases. 20,000, 30,000, 40,000, depending upon the date. All those things should be captured and recorded in the same respective dates in the purchase account of the ledger one by one. Then you have to total it. Purchase book total is already there. Normally, purchase book or all the subsidiary books will be total every week. Every week it will be total. Posted to ledger. Posted to ledger. Unless otherwise, there is no separate ledger is required. Example, cash book. Okay, then you are posting it. Similarly, you are posting all the items from cash book to respective ledger account. One of the ledger account is purchase. If there is a purchase, you come there. Cash purchase. Okay, in that way, cash book and purchase book are different from each other. Something you are asking.
Sir, if purchase is happening with 50% payment and 50% credit. So again, the transaction will be entered in both the purchase account as well as purchase.
That's it. Suppose you are buying goods for 1 lakh. Invoice is raised for 1 lakh. You are immediately settling 20,000 rupees, or some 50,000 rupees. You are settling immediately. In cash book, you write by purchase 50,000. In purchase book, you will write
Purchase for
50,000 rupees, the name of the supplier. In the return, invoice number and other details. Purchase book is more detailed than that of ledger account. Okay, so it will be recorded like that. Fine. But both will come to purchase ledger. T account. Okay, right. So now,
cash book will be in the T account form.
cash book. Yeah, it is T account form. Cash book is having a similarity of cash book. I mean, cash account.
So the same thing can be read as a cash.
Yeah, but one thing is there extra. If you maintain only journal without maintaining cash book, you will prepare two accounts. One is cash account and one is bank account. You prepare. But in subsidiary book system of cash book system, you will prepare only single account called cash book. It will have two columns. One is for bank, another one is for bank. I mean cash. Bank and the cash. Bank and the cash, two columns will be there. In T form, debit side two column, three column actually. One more column. Suppose when you pay or receive some money, discount concept is automatically coming into picture. Discount. You are paying 1,000 rupees. It's not paying 1,100 rupees. 100 rupees discount. For that, you need to record somewhere again separately. One more column will provide that is called discount column. Discount allowed column and discount received column. In the payment side, discount received column will be there. In the receipt side, discount allowed column will be there. So cash book in full-fledged format will have three columns. It's called triple column cash book. It is called triple column cash book. It's pure accounting. We are not studying that, but just understand. Triple column cash flow. Whatever the bank transaction, whatever the cash transaction is there in the business, it will go to that particular called triple column cash flow. Okay, come to the cash flow statement. So though we are preparing cash book or cash account, why do we need to prepare again cash flow statement? In cash book or cash account, all the flow of cash is already captured, right? Yes or no? Cash book, if it is maintained, everything is relating to cash is recorded there. Then why do we prepare again a statement called cash flow statement? What do we need? In cash book, yes, sir.
Financial position.
Financial position.
So we will be constantly monitoring the financial position of the company.
No, financial position don't have some vague idea. Financial position is nothing but what?
What is the cost we have?
Please forget all those understanding what we are having in the real, I mean, normal accounting thinking. Financial position is relating to only three things. What is financial position? Forget about accounting. Suppose your friend is asking you, can we go for a trip? Thailand. You are doing? My financial position is not good. Too bad is good. Not good. Not good. Huh? Yeah, not good. What do you mean by the sentence? My financial position is not good.
Low bank balance.
So balance is only about financial position, not about cost, not about expenditure, income, nothing. Balance is about position. Position means what? Your income may increase your position. Your expenditure may reduce your position. That's all. But position refers to what you are today. What are you today financially? So it refers to only three items. Equity, liability should be equal to asset. These three are only called as financial position. When I say financial position, I am talking about what is my liability. I said I already borrowed. Last year I went to Singapore. That loan itself is still due. My EMI every month is coming. I'm not able to settle it. That's what you're referring to. My financial position is not good. You're talking about your liability. You're talking about your asset. If you say your financial position is not good, means your bank already told my bank balance is having less balance. I cannot manage this trip by spending this much money. Okay, so that's what you are referring to, financial position. Okay, so that is not the answer for this. Any other guesses? Why do we prepare cash flow statement? Even though you are having something called cash book or cash account, which already records all the items relating to flow of cash. Flow of cash. Inflow or outflow. Payment is outflow. Receipt is in. Then why do we prepare cash flow statement? Any guesses? Yes. Simple point, that is, in cash book or cash account or cash book, irrespective of the reason, we just write it either in debit or in credit based on the payment or receipt. One side all payments, credit side, if it is an account, or the right side, if it is book, cash book. All receipt, debit side or in the left hand side, if it is a book, we are writing. That's all. Totaling all the credit side, totaling all the debit side, the balance is called closing balance. That's all. But that does not give you an idea for what purpose this cash flow took place. It is there individually. It is not grouping anything. Rent by credit side of cash account, by rent, purchased by purchase, by donation, by stationery, by salary, by commission, everything you are writing in the credit side. But you are not grouping anything. Grouping is taking place in ledger account of commission account, rent account, salary account. We know how much salary paid through salary account. But in cash flow statement, we have a provision to understand through what activity, how much cash flowing in or flowing out. That is possible in cash flow statement. I'll give a simple example.
The cash account tells me same.
No, cash account, it talks about entire amount of cash inflow and cash outflow. It does not classify anything. That's why we told you cash account, to sale, to government grant, to debtors, to bank. Like that, we are having so many receipts. From wherever you got the receipt, you are writing just like that. Wherever it goes, you are writing in a credit side. One side, wherever it goes. One side, where and all from it comes. Totaling it, comparing these two, telling the answer, sir, receipt is more by 10,000. That's called a closing balance. That's all. But that is not the intention here in cash flow statement. That is only for accounting purpose. We have to have a control over cash, cash management. How much comes, how much goes, how much is left out, should be known to the accountant. For that purpose, only cash book or cash account is maintained. But here, cash flow statement is recommending us to classify the entire transaction of the business into three categories. Entire, whatever it takes place, whatever it is. Okay, we are classifying the business activities into three categories. Before I tell the three categories, one more thing. What we mean by cash? Cash flow statement, I'm telling you. Something, a statement which is recording the flow of cash is called cash flow statement. Understood? Opening balance, how it flow in the particular year, how much is closing balance. Understood? But what I mean by really cash, if I don't have any specific meaning for this word cash, I cannot tell you. But cash flow statement is having a specific name for what is cash. It is not just hot cash. Normally we see cash means the note, cash in hand, the currency. But here it is not just hot cash. It includes hot cash, bank balances, cash and cash equivalents, demand draft, check you received from somebody. Okay, so immediately convertible into cash kind of asset, marketable securities. Equivalent, cash equivalent. Cash equivalent means promissory note, tomorrow it's going to mature, today it is maturing. Demand draft, today it is having maturity. Okay, demand draft is having maturity at any time. After you receive the demand draft, the next, the check is having maturity, post-dated check is having some time, post-dated check. If it is dated today, it's equal to cash. So all those things put together, we call it as cash with respect to cash flow statement. Okay. That's
Sir,
it.
cash flow, sir,
Once again, one person from offline is asking some question, after that I come to this.
Post-dated check should not be considered here because it can have any date in the future.
Yeah, correct only, but it's not outdated. No, nowadays, check usage is very much less, but concept wise are correct. It cannot be considered as a cash. It is not a cash. Okay. Even that's not a check at all. It's only a paper. It's only a paper. On the date of the check, on the date of the check, the check, the paper becomes a check. All right. So, yeah, somebody from online asking the question.
sir, cash flow statement prepared from like ledger or journal entries based on what? I mean, I know this, you mentioned that these all are, activities. So I will take out, ledger as my example to prepare cash flow.
No. See, listen carefully. Of course, I was explaining you with all these activities, but all these activities are captured already in ledger. By journal, first our subsidiary book in the first stage, then comes to ledger, then goes to trial balance, then it comes to profit and loss account and balance sheet. Now the basic document to prepare cash flow statement is two items, that is balance sheet of the current year and the balance sheet of the last year, with some information that we need to ask from the accountant if you have any doubt. Some additional information we have to ask. That's all. Now, another understanding is cash flow statement is an analysis. It's a tool to analyze the financial statement. If it is a tool to analyze the financial statement, what is the base to take the data from? Financial statement. That's what I'm telling. Income statement also sometimes used to find out the changes. Financial statement, properly two balance sheets. Along with that, if you need income statement, you can take. Otherwise, you can take some information from the account. That's all. I'll tell you another few minutes. What are those? Okay, is it clear now? Right. Now, three activities. Yes, yes, madam.
Cash flow, like you said, hot cash and all these, right?
Yeah.
So would that also mean that it is a liquid cash of the company as of that day?
Hot cash means what?
When hot cash.
Cash means what? Liquid only, no, but it's not in a liquid form. In chemistry understanding, it's not in liquid form, but cash means what? Suppose I'm having, see, this is liquid or not? Hot cash, but it's not hot, but it is hot cash. It is not liquid, but it is a liquid cash. I'm showing a rupee note to the class, that's it. So it's called hot cash or liquid cash, that's all.
So we can use that term also, cash or liquid cash.
Cash itself is liquid. Grand total. Grand total, somebody will grand total. Grand itself total, total also total only. There is a grand total. In that way, okay, but simple understanding is cash. Cash itself is liquid only. Okay, cash and cash equivalents. All right. So, cash, according to cash flow statement, we are classifying the business activities into
Three categories.
one is, or you can tell me
Operating.
some activity that is taking place in the business. Again, transaction activity is not nothing different from transaction. Same. I mean, another word, that's all. Business activity or business transaction.
Buying raw material.
Buying raw material. It's an example for.
Okay.
It's okay. That's another word, no?
Outflow.
Expenditure. Outflow. You are buying raw material by paying money, cash outflow. Okay, it's an example for which activity? So the percentage of what are those activities? Operating activity, financing activity, and investment activity. You name any happening in the business that should fall under any one of these three categories. Operating activity, financing activity, operating activities, financing activities, financing activity. But accountant will not worry about this. Accountant worries about only what's happening, irrespective of whatever it is. He worries about only one thing, that is invoice is there. I mean, the evidence is there. Based on the evidence, he will write. That's all. He will make the entry. That's all. But for an analyst, these are all required. We are now analyzing the business. Okay. The last one is investment activities. Just one line of explanation for all these three, I will tell you, then you can understand better. You will take some examples and understand a little more better. I'll tell you what is operating activity. Operating activities are those activities which are core to the business, core of the particular company's business activity. Business activity. Example, buying of raw materials is an example for operating.
Operating.
Payment of salary, payment of electricity bill, payment of commission on purchase, all fixed expenditures.
All, I mean, day-to-day regular basis.
Simple. Another example tell you. Payment of salary to the teacher by a college is an example for cash outflow of operating. From that you can make it out. What is operating? For a tire manufacturer, an MRF tire company, buying raw material, buying the rubber or something from which they are making tire, buying of that is called
Operating.
outflow of operating material. Selling of tire. No, yes, sir. Huh? You are from Bangalore, your son is also from Bangalore only.
Become vice versa.
No, how?
That's what flow.
We are not talking about outflow and inflow, no. We are talking about operating or not operating. Is it operating or not? Sales is operating means whatever related to sales is also operating. But we cannot go into that minute level because it's automatically getting adjusted in the income statement. What is coming and sitting over there? Sales only, net sales. When we said sales, it's only net sales. Already it is adjusted. But we need to go further. In trial balance, sales return will be there. Trial balance it will be there, you are right. But after trial balance is over, in the income statement, which will not be there? Sales return won't be there. Sales minus sales return, net sales is going to be. Right. Anything else? Operating activity. Can you tell me one example for operating activity? We already purchased, no, we already sold. Anything else? Expenses in activity. Expenses is noun, right? Payment of rent. Payment of rent is a cash outflow of operating activity.
Operating activity.
Rent received.
Inflow of operating activity.
Common sense, you are okay. Accounting sense, very bad. Rent received. Inflow, that you are very much right because common sense. Yes, inflow. But accounting sense, rent received. What is operating?
Inflow of operating activity.
Investment activity. It is not, see, you are not constructing building and letting it out. If that your business is letting it out of properties, then it is operating activity. Suppose another university is having one ground, playground. Okay, on Sunday, some other team, some other association is asking, cricket club or somebody is asking, sir, why don't we use this for 2 days for our tournament? We are letting it out. That is an rent received from letting out of playground. It's an investment activity for a college or for Infosys, for any company. Because their activity is not constructing a ground, forming a ground and giving it for rent. It is there for their own purpose. Sometimes it is idle. That time somebody is asking for some social card or something purpose, so letting it up by collecting some nominal fee. It is called. Investment activity. So now you understand what is investment activity also. Buying a furniture by a college is an example for
Finance, investing activity.
activity. Buying a laptop, buying a LCD projector, fixing some AC, air conditioner, buying a land, constructing a building, buying bus for the student commutation. All these things are examples for
Investing activity.
Only for fixed.
Yes. When I say investment activity, it is talking about either increase in fixed asset or decrease in fixed asset. Increase in fixed asset is cash outflow. Decrease in fixed asset is cash inflow. You are having some 10 acres of land, 5 acres you are selling it out. And you are constructing building of the remaining 5 acres. Selling of the 5 acre of land is an example for cash inflow from investment. Sometime back you invested some money when you had surplus on the 10 acre of land. Now you need money, you are selling it out. Okay, clear? Now third one. What is the one? Financing activity.
Financing.
Can you tell me now?
Dividend received.
Example for investment activity cash inflow.
Dividend received, dividend paid.
1 second, madam. What is interest received? When will you receive interest?
I have to make an investment.
With the debenture,
Deposit in the bank. That time it is called investment. Out of investment or getting some benefit.
Then for the dividend also.
Suppose you are understanding now 100%. Now you are a Muthu Finance or you are Sundaram Finance. That company is receiving interest. Is an example for
investing, financing.
For them, it is operating.
holistically you would understand. Concept you would understand. Don't go by that word. Interest received, interest paid. For Dayana University, interest received should be investment activity. Only there is no other point. For Sundaram Finance, Muthoot Finance, interest received should be sometimes you would ask that, sir, interest is okay. Is it from your customer or is it from some deposit you made in some other commercial bank? If it is so, that is also investment activity. Suppose it is received from customer, they are pledging their jewels, for that they are paying interest. For Muthoot Finance, it is interest received. It obviously is a financing side. It's out of their activity, operation. The existence of Muthoot Finance itself is lending money on jewels. Okay, that's why it is operating. Now financing activity. Somebody from online told something. Dividend. Yes.
Dividend received, dividend.
Dividend?
For shareholders.
First one, dividend
Received,
received. Dividend received is
Received.
investment activity.
financing.
No, interest received similar to dividend received. Both are same. In interest received, you are depositing money into the bank and the bank is giving you interest. In dividend received, you bought some company's equity share. You are buying equity share of some other company. Yes, you are investing in that company. You are investing in your business by buying fixed assets. Possible. Normally. So I have excess money. I bought all the fixed assets. I still have excess money. I am going to buy some other company's equity share. Instead of keeping that money in the bank. So that's investment activity. From that investment, you are receiving some dividend. So it's an example for cash inflow of investment activity. So what is financing activity?
Loans.
1 second. Yes, sir?
Lending loan.
You are very much vague. No loan.
Lending loan.
Lending loan is a by who?
Lending loan by the employer to the employee.
Is an example for investing activity. Lending loan to the employee by the employer.
Without
Is an
interest.
example. Even without interest, it's an investment activity. That investment does not give you any return. That's Investment need not give return. One second, let us clarify this. Suppose my college is giving me 2 lakh rupees without interest. It is there. 2 lakh rupees I can get from my college without interest. Every month, 10,000 rupees I reduce for the next 20 months. That's all. That is investment activity for the college, for the company. But he is not referring to that one. He is referring to something. What is that? Loan.
Loan taken.
Loan taken is the best example for financing activities. Loan taken.
Liability.
Wherever long-term liability increases, wherever long-term liability decreases, because of what it is increasing, because of what it is decreasing, all those what are called as financing activities. Raising loan from a bank, collecting money from shareholder by issue of shares.
I'm taking credit from somebody else.
What do you mean by taking credit from somebody else?
I have
Be
to pay.
specific.
Payable, amount payable is.
These specific gentlemen, payable, creditor, taking credit, all are very common term, no? Be specific. Take a very micro level point.
If somebody has invested in my company, I'm liable to them,
What they invested,
for my stock.
they bought your equity.
Uh,
So where from that credit all those comes here.
So that will be under finance.
Financing, 100%. The same thing I told in different way. What I told, selling of shares, getting money from shareholder. If I sell to somebody, my share to somebody, that somebody who is buying from my share, it's investment for him. For him it is investment activity, for me it is financing activity. You are talking from his point of view, investing. Yeah. Anything else? Issue of shares. Issue of shares. What is issue of shares? Selling my equity shares. IPO. In IPO, my company is selling shares. What is selling shares? I am giving a document, shareholder share certificate to the shareholder. I am getting money from them. That money what I get from them is called cash inflow from the financing activity. What is financing activity? Financing activity means how do you finance your business? How do you finance your company? How do you finance your investment? It's called financing activity. Raising of loan, repayment of loan. Raising of loan is inflow. Repayment is outflow. Payment of interest on loan is an example for
Financing,
cash outflow of financing activity.
redemption of
Is an example for
differentials.
dividend paid to the shareholder is an example for
Financing,
financing, outflow of financing. You raise the money from them. If that is financing activity, you are servicing them. You are compensating them. They are foregoing their money in favor of you. For that, you are compensating certain money. That is also called financing activity. Clear to you? Now, cash flow statement helps us to find out these 3 activities from the balance sheet as well as income statement, and we have to add these things together. Okay. Then you have to find out the closing balance. Say, for
Question.
example, 1 second. Opening balance. Cash flow statement will be like this. Okay. Cash flow statement will be like this. Opening balance. We have tried it here some amount. Where do you get it from? Last year.
year balance sheet,
Very good. Last year balance sheet. Sorry? Number. Yeah. Numbers.
Don't want us to see the numbers, so you can tell.
No, there is no number. I cannot write numbers. I am writing something. Number. Okay. Opening balance. Then net cash flow from net cash flow. What is net cash flow? What is net cash flow? Cash inflow minus cash outflow.
cash outflow,
Is equal to net cash flow. Net cash flow from operating activities. How do you find out this? Net cash flow from operating activities. You have to start with net profit. Net profit. You'll be having net profit in income statement. Current year income.
Yes.
Current year income statement. Net profit before tax. Minus or simply adjustment for non-cash and non-operating activity. Non-cash and non-operating activities. I'll tell an example for non-cash and non-operating activity. Actually,
Depreciation.
yeah, depreciation is a good example for
Non-cash or non-operating.
non
Non-cash.
only non-cash activity. Depreciation is a operating activity, but does not involve in cash outflow. Listen carefully. We are going to find out how much really cash generated out of operating activity. That's what the meaning of net cash flow from operating activity. How much really cash generated out of operating activity of this company. Why do I want to know? Why do I want to know that? Your net profits may be 2 lakhs, 3 lakhs, 5 lakhs of amount. In a particular year, your net profit is 5 lakhs. Listen here 1 second, then you can write it. Your net profit is 5 lakhs. You are understanding from the income statement. You are seeing that net profit 5 lakhs. Perhaps you say 5 lakhs is the net profit. Very good. But there is an item in the profit and loss account. Profit on sale of land 6 lakhs. Profit on 6 lakhs.
This one time.
Yeah, that is non-recurring income, and that is also not from operating activity. Profit on sale of land is an example for
Investment activity.
very good investment activity. A company is meant for generating more profit from operating. Suppose there's a college, fees collected is only 5 lakhs, rent received is 50 lakhs. Is it a good college? Operating activities little less. Too much problem of admission is there. So that kind of problem is there for companies also. So we are analyzing that. Net profit is 5 lakh means we cannot immediately come to a conclusion, okay, this company is good. Because profit and loss account includes everything. You remember the first line of profit and loss account statement is revenue from operation, revenue from sales. Second line is other income. Other income. If the other income is too much, revenue from sales is less, then there is something problem. So that problem is being analyzed and addressed here. Okay. So I have to add back the depreciation. If there is any depreciation in this company, I have to add back. If there is any profit on sale of machine, profit on sale of investment, profit on sale of land, anything is there, I have to minus it. You are asking a question. So profit, why are you minusing? The net profit of 5 lakh is after calculating the profit on sale of land also 6 lakh. Then original profit of the company is minus 1 lakh. If this 6 lakh is not there, simply minus 1 only. Minus 1 plus 6 is equal to plus 5. That's what net profit showing the profit of the company. In that year, sale of land supported the company to show a positive amount of profit. As he was telling, that profit is not going to be recurring in nature in the next year itself. You cannot have such profit every year. Government of India once decided to disinvest all the PSUs. One fine morning today, we are very shameful in the country, world. We don't have one airways for Government of India. You have one airways here? When Ukraine is calling us, come here, take your people. We are calling some airport company, airway companies, can you please help us? If Air India was there, we didn't call anybody. Just call the flight, go to then bring people. But here, what happened? Now we are sending the flights to other country, Sudan. Sudan. We are sending the flights there. We are calling somebody, private companies are asking help. We are paying money, can you please go on bringing our students from there or people from there? So disinvestment. selling of land, selling of machine, at one point, nothing will be there. Only Prime Minister, President will be there. Nothing will be there. CEO will be there, CFO will be there. Nothing will be there. If you do, always selling of systems. But I am not advocating here, selling that, selling of fixed assets is bad. I am not advocating that. Selling of fixed assets, if it is required, you have to do it. Okay, there is one bigger investment you want to do. You have two pieces of land in two different places. One is for 5 crore, another is for 6 crore. You want to invest 11 crore in some other place in a single place. That time you have to sell it. That sales is advice. No problem. Selling 5 crore, selling 6 crore worth of land, collecting, mobilizing 11 crore, investing in one business. Selling one air company and you are creating a bigger air company is good. 5G. Look at 5G or 6G, whatever the G. Okay, our G, what is doing? BSNL is not at all taken care. 2G. Anybody is using BSNL? Yeah. Once upon a time, BSNL SIM card, to get a BSNL SIM card, you have to wait for 3 months, 4 months. You have to bribe the people, officers sitting over there in the BSNL office. I still remember in Jayanagar, I went there and I was asking SIM card. 3 months I was kept waiting. Okay, so they will change it. Why? You are not giving any kind of facility to BSNL. BSNL is still operating 2G again. 3G is not. 3G has come. But when you are going to 5G, you are giving 3G to them. So how they will compete with your? No, we can say that directly, Geo and other things, competitor. Only competitor is Geo, only competitor. Okay, all try what it is doing, we don't know. The other day, last week, when I came from my college, up to Saturday 1 o'clock, there were some people standing nearby my houses. They're telling that the SIM card is free for 1 year, incoming, outgoing, data, unlimited free. Somebody told here, I was telling to my son the same dialogue, which is seemed to be too good is too bad. But children, no, they are greedy, after they don't know what it is. They are adamant. I want 2 SIM cards, that's all. I gave him 2 mobile, each one mobile with 2 SIM slots. One is already there, stored over there. One slot is empty, no. He wants to fill that also because of this free SIM card offer. 1 year data incoming unlimited free. I told there is some problem. Please don't go for it. He is telling what is the problem? He is giving for free. If it is not working, throw it, that's all. That's good logic, child logic, right? That gentleman who come from Geo is claiming that he came from Geo, but we don't know. I was asking you the ID card. By the time they settled everything, over they went out. What he has done is, he has ported the SIM. My child was asking for one new SIM, new number. He was also clever, he is asking, you give me new number. I use the existing, I also use the new one. If it is coming, work, otherwise throw it. That's all. But these gentlemen, what they have done, they ported it. Okay, with some lunchtime, everybody, I was filling the OTP, that other card. Everything done, we went. Night, after some time, the existing SIM card stopped working. Stopped working. It's coming a message, it's ported to Geo. And they're telling you have to recharge for 250 rupees. Then he's reading the cover. In the cover, it is mentioned over there. From 12 AM to 5 AM, data is unlimited. 12 AM to 5 AM, the data is unlimited. Okay, he recharge. At least 12 AM to 5 AM is working. The number condition is there. It is not for prepaid, only for postpaid. Now this poor boy, what do you do?
Another 90 days, he has to stay.
He called the previous service provider. Now we are using the new SIM card. I mean, new service provider, Geo. How they are marketing. So Geo wants to be only in the market. What we don't, we wrote a mail to try also, and everything is done, but we are going to see now. Try what is doing, we don't know. Number this. So this concept is 3 logic. You have to earn money only out of. You have to earn money only out of more. But does not mean that in one single year, sir, there is a more inflow from investment activity. There is more inflow from financing activity. Nothing wrong. Nothing wrong. You have to see what year it is, why for it is. Suppose you are going for an expansion. You are going for an expansion. You need money. You want to open one more plant, you need money. In that year, you are issuing equity shares. Your equity share is fetching you 1 lakh rupee, but your profit of the year is only 10,000 rupees. You cannot say that the operating profit is only 10,000, operating cash inflow is only 10,000, but financing cash inflows are 1 lakh. This company is not doing good. You cannot say like that. You have to compare 2 3 years. What for that financing has been done? A new project or settling of the loan previous loan? Fine. Some companies will be there. They have been having some loan raised from a bank, huge amount of loan, paying some interest, additional cost for them. No, they can issue shares, they can collect money, they can settle the loan. Many companies will do that. That is good action. In that time, you cannot say that financing activities having more cash inflows. You have broader understanding for you. Come to the technical aspect of this. Another 5 minutes, otherwise the flow will go. We'll finish the equity statement, we can go further. Now, you have to add the non-cash items there. Example, depreciation. Another one is you have to add the non-operating expenditure. You might have already debited in the P&L account. You might already minus in the P&L account. Other expenditure, which is not relevant to business activity. Donation. Okay, something like that. Interest paid. Interest paid is not an operating activity. Just now we discussed interest paid is an example for financing activity. But you already did it in your P&L account in the name of finance cost. So you have to add it back to the profit. Because of that much interest you paid, your net profit has come down, but it is not really operating cost. Interest paid is out of your financial management. You decided to borrow. You are paying interest. That's all. But nobody is telling you to borrow onto business. It's not an operating activity. It's a financing activity. So you have to add back the interest paid. You have to add back the depreciation, and you have to minus profit on sale of investment, profit on sale of machinery, profit on sale of any other asset. Because all this profit on sale of fixed asset is increasing your profit.
Investment.
Increasing your profit. Actually, it's not a operating profit, it's investing profit. So that adjustment you have to do. Next one, you have to adjust it for working capital changes. Adjustment for working capital changes. Adjustment for working capital changes. Working capital changes. Okay. Working capital changes. Working capital changes means 2 year balance sheet you are having, you will be comparing the current year asset, and current liability. With last year current assets and last year current liabilities. Okay, that increase in current asset and decrease in current liability. Increase in current asset and decrease in current liability, and opposite. Decrease in current asset and increase in current liabilities. Plus, minus. First one is plus, second one minus. I'll give you a format. Okay. Plus, minus. After doing this, you will get some amount. Are you able to connect this? You are having this profit. Okay, this opening balance, you can take the next column. That is easy. You can keep it here. Okay. You can keep it here. This amount, this net profit from profit and loss account we're getting, that can be here with this plus minus we are doing. With this plus minus we are doing. After this, you are bringing this amount to the next column. Correct. Suppose we have written only the essence, only the heading. Inside this, there will be so many depreciation, profit, so many things. So after this, everything is done. What you have to do? You have to bring the amount here. Here, this amount. The plus minus of these three is going to be here. Is it understandable? Huh? See, net profit you are taking from profit loss account, and you are adding or minusing certain items one by one. Maybe depreciation under this. It's a heading. The heading under this you can write depending upon the case, depending upon the company. Depreciation, profit on sale of machine, loss on sale of machine, all those things. Okay. If it is add, total it. If it is minus, in bracket you write it, that's going to be minus. Suppose assume here it is 20,000. Here it is plus 10,000. Here it is minus 20,000 means add these together and bring it. this amount, C column, I have some amount now. C7 refers to net cash flow from or cash flow from operating activity. Cash flow from operating activity. Operating activity. Already you have that line there. Yeah. Operating activities minus tax. Minus tax paid will give you the net net cash flow from operating activities. This will be. Yeah. Okay.
What is the difference between net cash flow from operating activities? That was
Is heading.
cash flow.
Is heading.
That's an 18.
Yeah. That's a heading. Point number 2 will be net cash flow from investing activity. Investment activities. Example for cash flow from investment activity. Just we discussed now. Sale of fixed asset. How do I know
Sale
that?
of fixed assets.
Yeah, very good. Sale of fixed asset. How do I know that? Last year balance sheet land and building was given as 1 lakh. Current year balance sheet land and building is found at 50,000. Unless otherwise anything is mentioned over there, 50,000 is changed. Increase or decrease? Decrease. If nothing is
Increase.
decrease, no. Last year 1 lakh was there, current year 50,000 is there. So there is
So
a decrease
decrease.
of 50,000. If nothing is mentioned in the question about this change, we have to assume that change is because of. Tell me. You had last year 1 lakh worth of building. Current year the building value is only 50,000.
Decrease.
Nothing about depreciation. Huh? No depreciation. No, clarified, no depreciation.
So decreasing the value of fixed
Possibility
asset.
sold out.
One room is sold.
One room is sold out. Okay, suppose you may say that the value of the building of in that locality may have come down. Very good, possible. If that's also not there. If that is also not there, then only chance is you sold out some piece of property. So decrease in fixed asset is an example for cash inflow from investment activity. 50,000 inflow. Suppose if there is a 1 lakh, if there was 1 lakh and 50,000, what you write it here? You write it here under point number 2, net cash flow from investment activity, point number A. What you write? Sale of building. How much? 50,000 here.
Sorry, if I purchase a gold.
Purchase of?
Gold.
Huh.
Investment. In terms of investment.
Yeah.
The value reduced.
Okay.
After some time, the value of the gold reduced.
Okay.
So it is an outflow.
There is no something after some time or something like that. Last year balance sheet, how much was the amount in terms of investment in gold? How much?
Okay, let's say 10 lakh.
Let it be.
This
Current year balance sheet is saying that investment in gold, how much?
8 lakh.
8 lakhs. Okay. Now what's the question?
Is it an outflow of investment activity?
If nothing is there, you sold 2 lakh worth of gold. That's it. Then I'll ask you. Your accountant, I'll ask you, sir, last year it was 10 lakh. Current year is 8 lakhs. What's the problem? What's the activity took place with regard to gold? Tell me. He will say, I taken 2 lakh worth of gold, I went back to home. Theft. Possible. First possibility. Second possibility. Sir, gold price has decreased. Second possibility. So then I have to make a ledger account of investment in gold. Opening balance debit side 10 lakhs. Closing balance in credit side 8 lakhs. I'm exploring the possibility of changes. Accountant is telling the price has reduced. The price has reduced means loss on value of investment. It might have been debited in P&L account, other expenditure. So I have to add back with the net profit to find out the real cash inflow from operating activity. It won't come here in investment activity because of this 2 lakh loss in price changes. There is no inflow or outflow. There is no inflow or outflow. Only because of value reduced. The 2 lakh might have been already charged to depreciation, P&L account. That I am increasing. I will write it here. Adjustment for non-cash and non-operating activity heading under that point number A. Reduction in the value of investment in gold, 2 lakh rupees. I will add it.
But we added, I mean, it's nonsense, right?
Why we are adding? Already you minus. While preparing a normal profit and loss account, you already taken this 2 lakh rupees as reduction in value of investment in gold under the heading called other expenditure or amortization and depreciation and amortization contain. This is an asset. I mean, investment, we are not calling it as amortization. So loss in the value of investment. 2 lakhs already you charged to your profit. Because of these 2 lakhs, your profit has come down by 2 lakhs. Which is not really a problem of operation. It's a problem of investing. So we are adding back to the operating activity profit. It is not adding because of this loss. Already you minus it. Loss is not added anytime. But already you consider this loss as a loss in your P&L account as an expenditure. That much it was reduced. Just like the previous case, no sale of fixed asset. You told no sale of fixed asset for profit is not a profit of operating activity. Similarly, it is not a sale, it is a reduction in the value of investment. So you have to add it back to the operating activity. Okay. Suppose it is not there.
So sir, for the sale of land also you will be showing under operation activity. That's what you mean.
Sale of
Late land.
how much worth of land, how much is sold.
Is 50,000.
It's there. 50,000 is there in the balance sheet. Difference is 50,000. Nothing is mentioned about anything on the land. This is sales, no sold, no. This will come under. It's not a profit. It's sold. But again, sir, 50,000 worth of land sold for only 50,000. Then okay. Suppose 50,000 worth of land was sold for 60,000 means 10,000 you already booked profit in P&L account. That you have to minus now. Why? It is not operating profit, you have to minus.
These numbers, we cannot, for P&L, we should not look at this.
No need, no need. Simple thing is you have to prepare one small ledger account of that respective item so that you can come to know what exactly the difference is. Same case, land and building. Land and building. 10 lakh was there in the last year balance sheet. Current year balance sheet is 6 lakhs. That's very carefully. 10 lakh was the amount found in the balance sheet in the name of land. Plant machine, take plant machine. Planted, 10 lakh. Current year it is 6 lakhs. 6 lakhs. If nothing is mentioned, there is no sales also. The 4 lakh is depreciation. If there is no sales, 4 lakh is depreciation. We have to add the depreciation here in the
operating.
non-cash items in operating 4 lakhs. There are some more information given about plant and machinery. Then confusion will arise. We cannot calculate just like this. Just do one thing, roughly open one plant and machinery ledger account. Last year balance, debit side. Current year balance, credit side, last closing balance. In between what and all took place, you make an entry. If there is any still mismatch, if credit side mismatch is there, suppose credit side short is there, meaning you sold some more asset. If debit side some short is there, means you bought some. If it is a liability, just opposite. The asset, debit side short is there means purchase, credit short is there means sale. Yeah, we will do one question very after the break. I'll complete this, just give you one more minute. So like this, there are so many items coming under here. Purchase, example, purchase of plant. Another one is sale of investment.
Plant.
Anything. Okay. Right. So now these two, like that, there are so many. You can take all those things depending upon the available data in the question. You can take and you can write it here and you can bring to the outer column. What is this outer column called? This amount?
Net cash flow.
Net
Net
flow,
flow
net
from-
cash flow from investment activity.
Yes. Wait, sir, one more minute. I told you 2 minutes. 1 minute only over. Third one?
Net cash
Yeah.
flow from financing activity.
Yes, the cash flow from financing activity. Example,
Loan taken.
sale of equity share, okay?
Okay.
Sale of equity share plus
Loan repayment.
loan
Redemption
repaid
of
is minus.
preferentials.
Yeah, loan repaid is minus,
Loan raised. is
okay,
Plus.
okay. So now you are having 4 amounts in the outer column. Am I right?
Balance plus.
Opening balance plus these 3. These 3 may be plus minus depending upon the circumstances. All these 3 values need not to be always plus or need not to be always minus. It can be 1 plus, 1 minus. My point is, any one of these 3 or all of these 3 can be minus also. Next one, if you do this calculation, this is called, what is this called?
Cash, cash closing balance.
Balance for current year.
Excellent, excellent.
Closing cash balance.
Closing balance of
Cash.
cash and
Cash equivalent.
cash equivalent.
He's a B.Com.
Not necessarily to be.
She is, sir, I know her voice.
Huh? Now only I told now in the beginning. Okay, so this is the cash flow statement. This balance will be found in the
Current year balance
current
sheet
year
of
balance
cash,
sheet.
sheet of cash flow.
Okay,
Cash flow
so
and cash
what you are
equivalent.
finding out here and what you are finding there should be same.
Matched.
If that is the case, your question is rightly done. Okay, understand now?
Right side.
14. See you after the break.
Sir, one doubt is there.
After the break.
Sir, one doubt is there. Only one.
Model question paper, you will share it.
Available in the.
Same way it will be there, sir, or something nearby.
Five questions in all the chapters. Very good. Question pattern I already told you. Pattern. You check the previous year question paper. A, B, C, 3 sections, 4 sections, A, B, C, D.
रेट का क्लास कोई भी नहीं है काम तो आएगा देख मार्केटिंग सब लोग थोड़ा थोड़ा लेट
How much? Yes.
Assignment marks. When are you going to award? At least we have an idea. You have an idea? Idea on how to study. You get to know your pitch. Okay. We take a piece of paper or your notebook only. Write down 5 cash inflows and 5 cash outflows of these 3 activities individually.
5 for each.
Yeah. Yeah, please start. If you don't mind, please put a speech. One more speech that time. Okay, something.
Sir, can you please repeat the question? So we cannot hear you.
Yes, yes. Am I audible now?
Yeah, can you please repeat the question?
One second, I'll tell you. Yes, yes, one of you come quickly. Yes. One of you. Gentlemen. You decide, you're a gentleman or not. 2 members in a bench. I mean, yeah. Alternative seats. Alternative seats. Yeah. No, 2 members, okay, but with a gap of 1 seat. He is a patient, okay, don't disturb. They will die. No, no. Okay, all of you decide? Yes, yes, yes. Online students, am I audible to you?
Yes, sir.
Yeah. I'm just asking you to write down 5 items of inflows and outflows of each activity. So for example, operating activity, 5 inflows, 5 outflows. Financing, 5. Yeah. For each 3. Yeah. For all the 3, 5 each. First operating we take. You take any, no problem, there's no order. Okay. Anything we can take it. I want 5 items of cash inflow and 5 items of cash outflow for each of the 3 activities. Yeah. Forget about the format. Just for understanding of what are the activities that come under cash inflow of financing, cash outflow of finance. Then cash inflow of investment, cash inflow of outflow of investment, inflow of financing or operating like that. Okay. 5 items and each item plus minus. Inflow means plus. No, not format, nothing. It will be a, yeah. You are writing first one, 5 number 1, cash inflow from investment activity, 1, 2, 3, 4, 5. 5 number 2, cash outflow from investment activity, 1, 2, 3, 4, 5. Likewise, other things. Clear?
For 3 different activities.
Yeah. 10 items I want, 5 each from inflow and 5 each from outflow. You write it in this way. Next working is. Then you keep it this from there. But it won't have. No, this is not flexible. Okay, right on. You understood the question, right? 5 items of inflow and 5 items of outflow for all the 3 activities. I will ask randomly somebody to read out. So write it carefully. Sorry? I am preparing for the next 5 minutes.
And
After you are telling me,
We can take from that.
you take from me only, no? You paid fees here only, right? You will take from me only.
So,
What you are taking and for what you are taking is important.
Redemption of preference shares.
We'll discuss, we'll discuss. We'll discuss, man, only, just 3 minutes, finish it that. Done?
yes, sir.
Good, good, good. Take last 1 minute. Okay, I think it is done. Okay, fine. I think we can discuss now. Anybody from online volunteering to disclose what you hold for for these three activities? Online people?
Yes, sir.
You connected? Yes, yeah. How many of you are there? So online people are majority. 40 are there. Chandan Singh, can you just read out what you wrote? Mr. Chandan Singh. Chandan Singh, are you there? Are we connected? Chandan Singh? Chandan Singh is having some technical problem. Gopi? Okay, anybody who is able to hear me, please respond from the online.
Sir, shall I?
Yeah, please.
Asana here.
Yeah.
Sir, I have taken the first one as stock investment. And for that investment.
No, we have three activities, right?
Yes.
What you're talking about?
Sorry, sir. I couldn't hear you.
No, we are asking you to write three activities one by one, right? Which one you are talking about first?
Sir, can I say for
Yeah, please.
Yeah, for operating activities,
Okay.
outflow should be purchase of raw material, paying rent,
Very good.
buying machinery.
Buying machinery is an operating activity cash outflow.
Investment.
Investment.
Okay, it's
Investing in tractors.
Okay, so
It's not operating activity.
okay. Employee salary.
1 second, madam. No, it's not. You are right. Only worried about right or wrong.
Okay.
Worrying about understanding, no? Why it is wrong?
Because it's under investment, because we are making investment
Yeah, why
like
it is not
asset.
operating?
Yeah, because
Asset.
it's
You're buying
kind of
asset.
asset. Yeah.
Yeah.
So we are making investment. That's why.
Simple
So
understanding, buying of
yeah.
any fixed asset, selling of any fixed asset should come under investment.
Investment. Okay, sir. Employee salary.
Hmm.
Okay. Paying bills.
What is that paying bills?
I mean, any kind of fee transaction we make.
Paying utility bills. Okay.
Yeah, utility bills. I'll
Okay.
write utility here.
Okay.
Utility. So for inflow,
Hmm.
I have written rent received.
Rent received is not a operating activity.
It's not.
Cash
Then
inflow. It is investment activity cash inflow. Why?
investment.
Rent is received
Okay,
by the
S.
business
Okay.
for an asset which is let out.
Okay. So sales, we can say
Yes.
sales cash collected
Sales of
from
what?
customer. Huh?
Sale of goods.
Sale of goods or
Normally
services.
sales means sale of goods. In that way,
Sales.
sales.
Yeah. Accounts receivable, interest and dividend.
1 second. Accounts receivable is an activity.
No.
No, it's
No.
also not.
Accounts receivable is a paper.
Okay, so yeah. So interest and dividend received.
Interest received and dividend received is an example for
Financing.
activity.
Okay.
Financing.
Investment activity.
Okay.
Dividend paid as.
Interest and
Dividend.
dividend received is an example for investment activity.
Paid is for finance.
So it's for
That is
investment.
Sorry, issue of equity loan or paid to
We'll go one by one.
company, but now.
That goal is talking about
Finance.
receiving of interest, receiving of dividend under the heading called operating activity. So we are strongly objecting it is not operating activity. Then what activity it is? It is investment activity. Why? You are receiving interest means you deposited money somewhere, you invested money somewhere. From that you are getting interest.
Okay.
Dividend means you invested your money in some of the company's share. That company earned the profit. That profit is shared with you in the name of dividend. So it is called investment activity.
Investment. Okay, sir.
Yeah.
The rent paid for the.
Rent paid
What
for.
about dividend paid?
1 second, madam. Rent paid is an example for operating activity cash outflow. Just one thing also.
What about land and gift?
One by one. 1 second. Let us finish it. Yes, madam.
Dividend Dividend paid is what? In financing, right?
Yes. Student side is cash outflow of financing activity. All right, yes, sir, you read it, whatever you wrote.
So now some other will continue.
Sir,
Okay, yeah. One person from offline is reading out, please listen, yeah.
In inflow, I have considered grant for.
Inflow means what inflow? There are three inflows are there. Investment, cash inflow for investment activity.
Gift. Receivable.
Sorry?
Grant for gift.
Receivable. So you are expecting the new government is going to give you some gift. Yeah, hoping so, but after receiving only 2,000 rupees per month for all the people of country, we are not voting. We are also voting now. All the government, all the things, what they do, 2,000 rupees for ladies, 2,000 rupees for family ladies, students, housewives.
1,500 for
Free bus for
all the ladies. For ladies.
ladies, women. In India, men also have voting, no?
Yes, this is what is.
Men also have voting. Sir,
Someone should be
Future.
blamed, sir.
future is
Then it will become like.
uncertain. You tell about activity, receivable is not. You have to see whether comes or comes, then only you have to see 2,000 or 5,000. Okay, so that is futuristic approach. What else you done?
Sir Manju here.
Sorry
to-
yeah,
a quick-
please.
You mentioned account receivables is not an activity.
Yeah, account receivable is not a activity, right? Accounts receivable is just a paper, no, it's a data. Sales is an activity. If the sales happens to be on credit basis, that creates accounts receivable. Correct, madam?
Okay.
Yeah, in that way, it is not to be considered here. And again, current assets and current liabilities, we are comparing with each other and finding out and doing it as operating activity. Of course, all current assets and all current liabilities are connected with operating activity only.
Okay.
Just have the current assets and current liability connected with operating activity only. Suppose debtor value increases, what's the meaning? Last year debtor was 1 lakh. Current year debtor is 1,50,000. Accounts receivable last year 1 lakh. Current year it is 1,50,000. What's the meaning? Sales on credit basis
Increase in
increased by some amount.
debtors.
2,000 is not yet collected. Last year collection balance is 1 lakh. Current year collection balance is 1,50,000. How collection comes from only debtor. Debtor comes only from credit sale. In that way, I said. Okay, anything else you written?
Cash, receipt for sales.
Yeah, that's called cash sales. Operating activity, cash inflow. Next.
And I have written revenue from customer payment.
The cash is not like the way you the word cash. It's cash flow statement, no? So use the cash.
Revenue from customer.
Cash from collection. Cash collected from customer. That cannot be revenue. Revenue is sales. Already recorded. Okay, now it's again revenue. It's not again revenue. It's only one revenue. Cash collected from customer. Okay.
Money used to purchase any fixed asset.
Money used to purchase. Why? Purchase of
Fixed asset.
fixed asset. An example for
Investment.
investment activity. Cash
Or.
out.
Cash out.
Out. Okay, then anything else you written?
Dividend and return from investment.
Dividend and the return. Return, what is return?
Return.
What is return?
Receivable.
What is receivable?
I mean, whatever I.
You have to worry about only cash. Interest, that's good. Interest received from investment. Interest received from deposit. Example for cash inflow from investment activity. Very good. Next,
Payments made to supplier.
payment to supplier. Operating activity, cash outflow. Nothing but goods purchase. Okay. Yes, sir. You can say something.
Transportation cost.
Transportation cost. Now I go to connect. What do you mean by that?
Like money spent on the like what which has been paid.
Again, confusion. Cost is nothing but cash plus something else. I can say my Ola cab company, I will pay every month once. Corporate claim. Monthly once you collect the bill. no money paid. Simply transportation, cash, conveyance paid, cash paid for conveyance. Cash paid for conveyance, example for
Operating activity.
cash outflow.
Cash out.
Very good. Next.
And the money spent on fixed assets.
Money spent on fixed. What do you mean money spent on fixed assets? Very good. Because the car is there. We are doing some enjoy every day morning. Money spent on fixed assets. Huh? Accounting term, use business term now. The purchase of fixed assets. If he is saying purchase of motor vehicle, he say purchase of scooter. Purchase of car, something like that. All are example for cash outflow of investment activity. Anything else? Quick, fast.
Loan taken and interest paid on.
Very nice, no? It's like in India. Loan taken, interest paid. Right for some time, huh? Those days are gone, man. People will give you 1,000 rupees loan. Only 900 rupees. We don't want that kind of system in India today. They're paying you, we are giving you loan, you do business, decide. Okay. Whether you are having profit or not, you want some more time. Two transactions, you wasting your time, no, two transactions. The loan taken, this one. What is the example? Loan taken is?
Cash.
Inflow means what money comes to you. Outflow means you are paying to somebody else.
Repayment.
Loan taken means money comes in or money goes out. Comes in. Let him think, no, why do you disturb him? Money coming in, loan taken. So it's an example for cash inflow of
Investing.
Financing.
How do you finance your assets? You want one car to be purchased. You don't have money. You are going to a bank. Sir, I want car loan. Bank is giving you car loan. The car loan, what you are getting from bank is financing your car. That's why it's called loan raised is financing activity. Buying a car out of the loan or buy your money, no matter. Buying a car is an example for
Investing. Invest.
Investment.
How do you get money for the business is financing? What are you doing with the money is investment. How are you getting money to the business is financing. This is what it is, no? Suppose somebody friend is asking you, why don't you come for a trip? Immediately say, will you finance it? You don't ask like that. Please sponsor it. But sponsoring is different from financing. We may use it interchangeably, but so many times people getting finance and thinking that as a sponsor. Not paying back. Sponsoring is just sponsoring, free. But financing is getting it for an agreement, later you have to pay back. So financing activity is raising loan, taking loan. Which you take a loan 10 crore. Out of 10 crore, 2 crore you are spending for buying a land. Buying land for 2 crore is example for
Investment.
of investment activity. Remaining 8 crore you are buying raw materials. That's an
Operating.
Operating. Yeah. How money comes in, how money goes out for what purpose. That decides what activity it is, investment or operating. Yes, sir. You can say something?
For financial.
Yeah.
The issuing of debentures.
Issue of debenture is an example for cash inflow of
Investment.
What is debenture?
Debenture is raising a certain amount of money for certain time. And paying annual.
Loan also raising certain amount of money for a certain period of time.
Yeah. But this is too popular.
Debenture means the paper, man.
Yeah, paper.
The paper was very low level language, no? So we can say document. Debenture is an acknowledgement of debt. Debenture is a document that acknowledges the debt raised by, loan raised by a person from somebody.
Fixed percentage of it.
Yeah, fixed amount of money for a fixed period of time for a fixed interest. Debenture. Debenture is also loan taken from the public by the companies. Debenture. It's a document that acknowledges the debt. Okay, very good. Next. Number 2. Issue of equity share. Example for financing activity cash inflow. If you cash to company employees and cash, yeah, it's also cash only, no? Okay, I'm teaching in Director College, teaching in online, offline, teaching is being that's over. Okay, next. And I have one more is the bank loan. Bank loan, okay, that's okay. Taking loan from a bank, issuing debenture, selling of liquidation, selling of preference. All these are examples for cash inflow, financial. Only 3 are done. 4 are done. No, debenture. I know only 4 years. No, I have debenture, preference share, equity share. No, shares is shares. No. How can you say? Students are not students. You cannot come on Monday to this college and say I am a student of this college. Can you? Shares are shares, okay, but there are different types of shares. Equity shares are different from preference shares. Preference shares are having only few years to be shares in that company. Equity shares are permanently shares of that company. Okay, if you take it that way, issue of shares. One category. And another two. Another two. You want from me? That's what. Yeah, yes, sir. Financial activity cash inflow. Except these three. Only 3. Except these 3. I think except issue, trade, and debenture. Yeah, loan from director, loan from the bank. Loan from bank. You take a loan from bank, we take loan from bank. Director. Loan from director. Other than loan, you tell us. Okay, other than loan, sir. Bonds is like bonds. Bond and debenture same law. Accepting preference and equity. I will accept the bond and debenture. Bond and debenture say classmates. He does not even accepting 2 class people, but you are telling same class people. No, anybody written anything on financing activity except loan, debenture, and equity or shares?
Interest received from customer, mutual funds has receiving interest from customer. It is a cash inflow of financing activity. It lends loan and it receives interest.
Tell what it is, I don't know. Something make me understand.
Interest receiving from customer.
Interest you are receiving from customer.
Customer is a cash inflow, right?
Receiving anything is cash inflow.
Okay.
We agree.
Yeah.
But from customer, where you are receiving interest?
That time you said, right?
Yeah, bank loan, if you give, you receive interest from customer. For them, interest is operating activity cash inflow.
Yes.
Because they're lending money, lending is their nature of the business. Getting interest on loan given to the customer is cash inflow, no doubt, and it's an operating.
Operating.
Okay, I can say.
Customer pays interest when
For what?
there is a balance. Let's say that my customer has to pay me 10 lakhs by end of this month. And they say that we are not paying end of this month.
Normal companies are talking about.
End of this year.
Normal company, not a mutual fund, not a bank.
Normal company, in my company.
Okay.
They say we'll pay in the end of year, but with interest for whatever 6.
That's a income, that's a cash inflow from
That is a cash inflow.
Investment.
investment activity.
Company.
No, simple. He has a customer. His money is due on 30th April, but the customer happened to pay only on 30th May. 1 month delay. For that, mercilessly is collecting money. Interest. He is not calling it extra. He is telling the name also interest.
Yeah.
Thinking that the customer will go to another company next month. So what does it refer to?
Depends on what business is doing.
That's what I asked him. He's telling normal manufacturing company.
Machine.
Yeah.
They should not pay full.
But in the initially there should be term there, the fine will be there.
It is there. In the invoice it is mentioned.
It will come under operation now.
But it is not operating, it is investment.
Investment.
Investing. Technically speaking, it's very rare of rarest case. Nobody has to do that. Some customers are keen. Customers are keen, but there are some companies, they are waiting for that company's product and all. So that company may do that, but we cannot say that's a management policy, collection policy, credit policy of the company. Okay, accountant does not have any role to say about the credit policy. Okay, but management decides that. Suppose they decided they're collecting means, then invest because you invested on debtors. You invested on debtors are giving more. If you are not collecting back, they are paying. If you collect it back, then again reinvest somewhere, you get money. Okay, in that way it is investment activity, but it is not coming anywhere. It's very rare of rarest occasion. 1 second.
Sir, in that same regard, when I'm selling a product, so for a customer will have a date, certain date. If the date is crossed, you will minus 5% of the cost, 5 or 2%. That is actually standard practice.
Yeah, correct.
So that minus
Terms of trade.
terms of trade. So 2% will be minus from whatever the cost I have given.
Suppose 1 lakh rupee invoice is raised on you,
Yes.
and there's a condition that if you pay within 30th May, you can pay less 2%.
No, not like that. So I have sold one, I have taken money for selling a product.
Okay.
So
Advance you take it.
Advance and 50 again after invoice 50% I will receive the payment.
Okay.
So 30th of this month I should deliver the product.
Okay.
If I delay the delivery 1
Customer
week,
will ask you to pay, correct?
no, sir, I'm selling a product to you, and you have given me a date of 30th May this month. You have to deliver the product goods. If you delay 1 week, in the terms they will mention 2%. I will minus in the cost if you are not delivering.
Yeah, it is.
So that will come under financial one.
No. We are talking about some future, right?
Operating. Operating.
But you are losing money there.
Yes, correct.
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 The seller is losing money.
Yes, correct.
1 lakh is agreement.
Yes.
Delayed delivery.
Yes.
2% reduction.
Correct.
Okay. So now this stays. That's all.
Operating.
98,000 is the operating activity. Cash inflow. That's all.
2% is the 2,000 is the loss.
How much? How it is loss? You are getting how much for your product?
98.
You have not got that, sir. Where from losses? You are delayed or cross delivery. It is giving you 98,000. There is no outflow. Is there an outflow here?
Inflow.
98,000.
But it is actually what I am supposed to get.
You may think that if you are also you may get it. Agreement is done. Agreement and what is happening? What is happening when you are taking consideration here? See here, you are receiving 98,000 rupees from sale. It is very simple. All these complications, no matter for us. What is happening? Sir, I am selling. For how much? 1 lakh. Did you receive 1 lakh? No. How much you receive? 98,000. Sale of goods is equal to 98,000.
But my invoice is for 1 lakh.
No. Your invoice is not for 1 lakh. The contract is for 1 lakh. You agreed to deliver a product at the rate of 1 lakh. Penalty you are foregoing. Okay, 2,000 rupees. These are all very rare cases, but all these things will be adjusted in net profit. We are talking too much about 1 second. Too much about operating activities. Operating activity, look at the statement. All other 2 activities are having direct recording. Sale increase of asset, reduction of fixed asset, direct entry there in the cash flow statement itself. But operating activity, we are taking reference point from. Look at your statement. Operating profit, we are not taking directly. Operating profit, operating cash inflows, we are taking a reference point from net profit. All these things what we are talking about is already captured in net profit. In that way, it is dealt in cash flow statement for operating activities. Yes, final one. Yes.
The same kind of example, customer paid 1 lakh rupees.
Okay.
For some machine. I got to know that I cannot do this machine for whatever the technical reasons.
Okay.
I cancel the contract.
Okay.
I have to repay him, but I delay by 1 month.
Okay.
For internal reasons.
Yeah.
He asks interest on that 1 lakh.
Operating activity.
The interest paid.
Operating activity.
But in the other case, the interest received.
Yeah.
Was.
In that case, what is the problem? Your money is with others. If you are not received, or if you are receiving, you can invest in some other place. Okay. But here, you are taking the money as an advance from your customer.
Somebody invested in me.
Yeah, it's not investment, no. He is buying, he is paid advance for buying a product. Price he paid in advance, that's all. Price, the price, yeah. Paid in advance. So it's an operation. Because of your operational delay, you are not able to deliver the goods, or you are rejecting the goods. You are not technically, you have a problem. You are not able to manufacture it, and you are canceling the contract. Because of canceling the contract, you are supposed to pay some penalty to him. That penalty is operating loss. Operating loss. That's why it's operating cash outflow. Once again, keep 1 point in mind and ask all these things. One thing, that is, all these things are operating activity that is captured in net profit itself. Net profit itself. Suppose if there is any non-operating or non-cash expenditure, we just plus or minus those things with net profit. That's all. So we need to go with clear cut of the operating activity inflow and outflow. That is already taken care in the profit and loss account. Only thing is whether it is non-operating or operating. Whether it is cash expenditure or non-cash expenditure, that should be considered. Okay, anyway.
Sir, you said sponsorship part, right? So if it is sponsored or donation is received, under which activity?
Anybody? Donation received from whom?
From any.
Normally we should take donation, no?
Let's have companies doing.
For a company, maybe let's just say, maybe a relative just gave some gift or something
To
in
who?
the form
To you?
to the company.
All relatives. Company will have any relatives.
Sister concerns.
I mean.
Too much you are expecting, no? I can just modify this. Government is giving you some subsidy. That is possible, but no relatives is called company. Company. They will give company, they will give to the company, but not to the company. Okay, so that is coming under this activity. Suppose the land is granted to you. You are a MSME.
Investment.
Wait. Don't take a conclusion. You are a company doing MSME business, coming under MSME category. Okay, in a backward area, government is promoting businesses. In that area, government has given you some 50 cents of land. So it is a gift for a gift for you. The cash inflow is there in this? Yes.
No. Asset.
Investment, sir.
Thank you.
Yes.
Some kind is coming to you. Your cash, no change. Previously also no change, now also no change. You cannot take it. But land value will increase. When preparing a land and building account, you have to consider this in the debit side. Grant from Government of India, this much amount. Say for example, original land value in the beginning of the year is 10 lakhs. Closing of the year is 1 crore. Without any information, you consider this 90 lakh as cash outflow. Correct? 10 lakh was the land value in the beginning, balance sheet. Closing balance is 1 crore. Increase how much?
99.
90 lakhs. Okay, 10 lakh and 1 crore. Okay, I'll change it. 10 lakh and 1 crore, 90 lakhs. Okay, fine. So if nothing is there, this 90 is to be considered as
Depreciation.
cash in outflow from investing activity. You have purchased land, that's all. If nothing is told to you, you have to assume it's purchased. So within 1 year, 9 lakhs, they have to change, maybe. But you have to tell that. If nothing is told, if in the question also, or in the company also, if nothing is told to us, you have to consider that 90 as cash outflow from investing activity.
How do you consider it as outflow? Cash did not
Because-
go at all. It's a inflow, right? Because
What is inflow? How it is?
because your land will increase 90 lakhs.
Reasoning later we can go. What is the fact I told you? Nothing. Last year balance sheet, I am finding an item called land. How much it was?
10 lakhs.
10 lakhs. The same land, current year balance sheet, I am finding it is written as. In this case, if nothing is told to us about the land or about any other transaction relating to land, I consider that 90 lakh as cash. Outflow.
Because of purchase of additional.
Inflow was there. Now it has become 1. And now it has become 1 crore. It's increase only, the inflow only, sir. That's what it has been.
Yeah.
Sir, you had 2 water bottles. Now it is 5 water bottles. How much it will increase?
4.
Inflow of water bottles increase.
Yes.
Inflow, water bottle is there. The water bottle increase. The inflow of water bottle is there. The inflow of water bottle, you might have stolen like this. Or you might have gone to a company and purchased. While buying, you might have paid cash. So cash outflow is there or not? Without cash outflow, your asset cannot increase unless otherwise there is some appreciation or there is some kind of this kind. So increase in asset, don't compare, sir, asset is increasing, no, so it's inflow. No, asset increases means Your money gone somewhere, from that place, you brought some asset to you, somebody given to you, somebody sold to you. In that way, I'm telling, it's a cash outflow. Suppose asset is reduced.
Sale. Sale. Sold the gold.
Inflow.
Sold
You
the
had 5 water bottle, 4 you sold, 1 is only remaining. 4 you sold means you might have received money from the buyer. That money only we are calling it as cash. Inflow. That's it. Now company is granting aid to the government, to the companies by government. Now 10 lakh has become 1 crore. I will consider this 90 as cash inflow. Over. Suppose there is a sentence given to you. Accountant is saying, sir, the same land is given by Government of India to do the business in this area. That you type it in the left side. Land account 10 lakhs. Again 2 granting aid by government 90 lakhs. So there is no cash inflow. 1 crore in the debit side, 1 crore in the credit side. Account is tallied. There is no cash inflow. There is no cash out. 10 lakh was there. 1 crore is there. If no information is there, I write in the debit side to cash or to bank 90 lakhs within bracket purchase or that. Then 90 will come to cash flow and have investment activity cash outflow. Sir, this is not purchased by us. This is given by Government of India. So why should I consider that in a cash outflow or inflow? I will write to granting aid by Government of Canada, Government of India 90 lakhs. 10 lakh was there. 9 lakhs has come in the form of land. Total is 1 crore. Credit side balance, closing balance 1 crore is already there. So there is no inflow or outflow. Cash. It is not purchased. It is donated by somebody, gifted by somebody, or given by somebody. Aid, granting aid. Anything for that matter. Land and building, or any other matter, technology, everything like that.
So what if a company gives a donation to an NGO?
Anybody? Donation to NGO by company.
It's
Investing.
this is
Neither investing nor
adjustment in operating.
cash outflow. It was already captured in profit loss account. If you give donation.
So we have to reduce from operating.
1 second. It
Adjust.
might be captured in payable account. To the tune of donation, your profit will come down. Donation is an expenditure you might have considered while doing the payable account. Other expenditure, in that you might have added. You minus from sales. With that much amount, your profit is less. So now what you do, you have to add the donation with the profit to find out the real cash inflow from operating activity. It is not operating activity, but you already considered as an operating activity. You are now removing it. Removing it means you add it back. Expenditure removing means adding. Income removing means minus. Income added. You have to minus it now. Donation you received from somebody, you ask now. If that is the case, you have to minus that now. Donation given, you have to add it. To find out the real cash inflow from only operating activity.
Like if we have our customers who are investing for research for interest.
Customer, why is investing for research?
I mean, they are interested in having that solution research. So if our customer invests
In your company.
in our
What if
company.
you investing?
Investing in cash.
They are giving you cash.
They are giving us in cash for research for interest. Like, you do research for about 3 years and then, later on, after that, we have to pay interest for that amount. Can that become a financial?
I'm not understanding what the transaction is. You are a company.
I'm a company.
I'm
I'm
coming to you.
interested to, like, for example, this OpenAI who was investing few years back on this ChatGPT.
Okay.
So we invested to OpenAI. Okay, saying that you do research for about 3
No,
years.
I understand now. My
And
question
after
is,
a year, you pay.
no, I understood now. My question is, a client is giving you some kind of amount to you. Okay,
Can that be like financial cash inflow?
some money is given to you by your client to do some activity. To the benefit of them in future. They get some result in the research that can be used by them later on. But now they are giving you money. In what form they are giving you? Giving money is not that just easy, no. There will be agreement. What name you are calling that money? They might be investing in your company by buying an equity share. or they will be investing in your company by buying a debenture, or they can be giving a loan to you. Only these three possibilities are there. If they don't give any of these three, they are giving advance to you, that's all.
Project advance.
Advance, that's all. If it is a project advance, it's a operating equity cash account. That's all.
So what if gold is pledged for cash in order to use it for the company?
Loan. Somebody is giving loan on, honestly, somebody is giving loan on your gold. Loan is loan.
So that means like for financial, then it should be loan or debenture or
Share.
share.
Only these three are major activity, cash inflow from finance.
So anything we
If you
say,
repay all these three, cash outflow from finance.
because he was looking for fourth one, then that means there is nothing.
Is there?
Grant received in cash.
Sorry, sir.
Grant received in cash. Operating activity.
Grant received in
Cash.
cash. Is it operating equity? Grant received in-
Yes.
Government giving you some growth, take this and do business. Then the grant in A. But is it possible? Cash, they're giving you. They're not giving you cash, they're giving you some subsidy of electricity, some land, some raw material. Okay, if it is, if that is the case, what activity case?
Then you want loan.
No, they're giving free cash, that's it. Is that, what is that activity? Financing.
Financing.
Cash received from any of the governments for doing a business free.
Operation.
Subsidy. Yeah, what activity it is?
Financing activity.
Investment.
Financing activity, madam, financing activity. Government of Canada is giving you 1 lakh rupee, start the business and do it. It's financing. Inflow, no? You are having government. Operating, financing, investing, we have problem, I can understand like that. But inflow and outflow, we have a problem, you have to check it.
Managing the
Last
account.
last time in case of land, it was outflow.
Sir, there it was two assets. There were two assets, one is cash, another is land. But here only one asset. What is coming in? Cash coming in. What is increasing? But in the previous case, cash went down, what is increasing? Land was increasing. That's why it was cash outflow of investing activity. This is cash inflow of financing activity. Inflow means you will see the cash only, but the cash increases or decreases. Cash increases means inflow. Cash decreases means outflow. That's it. But for what it is increasing, for what it is decreasing, is deciding what kind of activity it is. Clear? I think we are crossing the time. Huh? I can understand. No, we are not crossing. Not almost. Yeah. For outflow of financing activity, repayment of loan, payment of interest on loan, redemption of debenture. Yeah, sorry, one person was asking me redemption. What is redemption? Redemption means giving back the money. See, issuing share means getting money from shareholder. Redemption of share means giving money, get the certificate, the shares back. Redemption of loan, redemption of debenture, redemption of preference shares. Mostly, preference and debenture will be redeemed. Equity will never be redeemed. Equity will never be redeemed. Equity is a perpetual security. Once you issued equity share, you need not bother about repaying. Government of India through Companies Act is saying, or for all the government in the world, once the share is issued, it is issued, that's all. Nobody can come back to your company and take back your share, give my money back. No, such arrangement is not there in this world at all. But there is something called buyback. Buying, it is buying back only. It is not selling back. Buying back the option of whom? Company. You cannot go back to the company and take back your share, give back my money. No such arrangement. The company wants such kind of thing. Company may come to you. Can you give back your share?
I can say I'm not sure, sir.
Yes, you can say. It's your share. In L&T case, it was happened like that, no. Mindtree and L&T. Mindtree shareholders, they were not able to sell. They are not selling. But L&T was compelling the shareholder to sell. Promoters are not ready to sell. Then they raise the price. In open market, they bought it. It's not buyback. L&T was buying the shares of Mindtree in the open market by increasing the share price. Suppose I have a share of Mindtree, one share today it is sold for 600. L&T is coming and telling I'll give you 1,000. Why not sell it? I will sell it. I will think that okay, tomorrow L&T will sell 1,100. I will wait. Such kind of shareholder may be there. Or somebody is I bought for 100 rupees only, Mindtree long back. 1,000 rupees is coming from L&T now. Okay, let us encash it.
When we are selling our stock in Zerodha, so the stock is holded by the company Zerodha or?
No, Zerodha is just a broker.
Yes.
Zerodha is just connecting you with the buyer. With the buyer. You are having some 200 shares in Infosys. You want to sell. You don't know who is going to buy. But Zerodha knows who may be buying it. So Zerodha is coming into middle.
But it gets sold immediately.
Yeah.
There are buyers.
Yes, there are buyers now. See, that's what stock market. That's what actually is liquid. Anytime you can sell. That's why again, top class companies. Buyers are more in number. Demands are more. Even though if it is a small company, if you reduce your price, today some company, a company share is 200 rupees. But you're quoting it to Zerodha, sir, I'm ready to sell for lesser than that. 190. But people are coming to you, they will buy. Zerodha is just a broker, stock broker. Their job is to connect the buyer and seller of the stocks. Based on the rules and regulations provided in the country. For that, they charge some commission, brokerage.
Which one for financial cash?
Anybody? From online, anybody is having any other cash inflow, financing activity? We don't know. Granting aid from Government of India. There is good one.
Financing.
7th or 8th month.
Financing.
Pledging loan and taking loan, pledging gold and taking loan.
Financing.
In that case, only two. Only two.
Then you are asking us to write 5.
No, in that case, it is true. But I'm not taking this case in the beginning, right? If you take that case, all three activities are same business activities. Financing, investing, operating. All these three things put together, you can call them as business activity. You cannot go like that. Where grouping is needed, we are grouping it. Where detailed notice required, we are going for detailed. Loan is not just loan for all. Loan is, bank loan is different from director loan. Coming from director loan, that loan is very good source of finance in a company.
It will be personal.
Sorry?
Director and anyone who is putting money is a person.
No, personal loan is something we are getting now. What we are giving is not personal loan. Suppose you are giving loan to me, not personal loan. Director of the company is asked by the company to give loan. Why for? To have a more holding in the company. Directors are always looking for changes, right? They just go out. If the company is going to, now this from BJP, some people have gone to some other party, right?
Congress.
They think that it is going to or something like that. But some company is going to be like the loss making company. Director is slightly going to other company. To hold that, we take loan. If it goes, this loan we cannot get back. Like that, some arrangement. That one is very good source of finance in the company. Next time, I will study about this in detail in corporate finance or financial management, where and all you can raise money. All those places where and all you are raising money is called financing.
Because like all of these, what we are saying in financial, like these mostly will not be done in cash, no, but still. I mean, like pledging gold and taking loan.
Cash only no. So pledging.
Not liquid cash.
It's liquid cash.
Bank.
Liquid cash.
Bank.
Bank account is coming now. That is liquid cash. For us, everything defined. What is cash?
Not hard cash.
What is defined cash? Cash is or cash, bank balances.
Cash and cash equivalent.
Reasonably identified in the beginning. Okay, I think we can stop to this. I thought of doing one question on this, but we have discussed in detail about the three activities. I request you to take 3 questions from any of the textbooks for cash flow statement. Any textbook for that matter. Any, no, post 3 questions. The first three questions from any.
Post 3 questions.
Already there in the syllabus, it is there. You can see 11th standard, 12th standard textbook, it is there. First you can take 12th standard textbook, cash flow statement and chapter is there, read it. Work out 3 questions in the, practical questions, not an exercise. Answer will also be there. How about this? Ratio is already done now. Same textbook, but if you're reading a textbook, same 12th standard textbook, you can read ratio.
In detail.
Full details. Both the chapters are detailed in 12th standard textbook, CBSE textbook. It is there. CBSE. I'm not sure about this. Our Karnataka State Board syllabus. It is there. Majority of the states are following the similar nature of CBSE only nowadays. So you can take it. Okay. Next class, we have one small chapter. We'll finish that and we'll discuss about something on questions, exams, etc. Assignment. Somebody is asking for assignment mark and all. You took a lot of time to make it. I have some time to read it and then give a mark. I cannot give it just like that. 18, 15, 20.
No, 25, 26, 20.
28.
Never happens now.
30.
Teacher.
So even 30 marks. 30.
Don't
Yes,
need for
sir.
30 marks.
I need that.
Yeah, you are supposed to get that. Everything is correct. And also it is not a trial balance. All debits should have its own equivalent corresponding credit. It's a exam. 30 is equal to 30. No. If trial balance, you can expect 30 is equal to 30.
Correct, sir. We should get 30, 30. Both sides.
Yes, sir. Class, listen. One of your classmates is asking. Yes, sir. Online, somebody asking?
No, sir. Balance sheet should match both sides, right? So.
Yes, balance sheet should match both sides. I understand your question. I do accordingly.
Balance sheet also has to match, right?
Okay. See you then. Thank you.
Thank you, brother.
Thank you.
What happened? दादी गई?
हाँ, वो मेरे पीछे कैमरा की
Hello. Test.